Yeah, good morning everyone. Welcome to Trading Campus. Let us start with our daily market commentary. Now, today what I have basically open is the S&P 500 chart. So this is the weekly format of S&P 500. Reason to open S&P 500 is to get some clear signals from US as to how S&P is performing. There was an important point uh, which happened yesterday night of the FOMC meet, and it was very much clear that on 15th of March, 18th of March, whenever is the next meet, there will be rise in interest rates because of the back of higher inflation. Now, when I see on the weekly chart, after the swift ride which we had, a bearish engulfing pattern was formed, and then it opened gap down. Something which is important over here, 2550 or 2750 or 2760 is the continuous high which is being made. So ideally that high is maintained, and we are seeing selling around those levels. So what I see over here, apart from day one, last week, couple of weeks, and even the present week, the same range of highs are maintained, and we are seeing selling to persist. So this selling basically shows there is a clear downside level which is possible on S&P, and that is where it can give some little pressure to Nifty as well. Now let's go on the daily side to understand what happened yesterday. So what we see over here from the highs, continuous fall had happened, and then after a big fall, last fall, then two green candles came up. Then it also breached the higher part of the Moribazu. So this is where we can understand, or we can say the support can come in. Okay, and it also tested once almost around here, and now it is inching towards 2685. So one thing is pretty much clear on the higher side, 2750 is kept intact and is not going down. So there is, sorry, it's not breaching high. So this is a clear indication of resistance on the upper side, and seeing the pressure on the downside. The important point is 2685, and we can have S&P going down almost 50 to 60 points. So that is around 2% fall is quite possible, right? So that is what we are seeing after the FOMC meeting. So after effect can come into place, and we can find some selling at least for 2 to 3% on the downside. Now let's come back to Nifty. So this is the weekly format, and now what I see on the weekly chart of Nifty, the same thing is there. The only difference from yesterday, what we are seeing today is in this week it is now still going down, right? It's a complete red candle. Never tried a lot, but never could reach above 10,500. So today it can reach to 10,275, the previous low, and maybe even lower if Bank Nifty goes down. So weekly setup, it remains weak. Now let's go and see on the daily basis. One important point on daily basis, where from last 4 days, even if opening gap up, it basically pulls itself down. Today it is below 2 days low, right? So it is almost over there, 10,350, and it is below 2 days low. So this is a critical juncture for Nifty, and if it does not, if it is not able to inch itself higher, there are serious troubles for Nifty towards the end of the expiry or today itself. As I see over here, continuous supports were maintained over here. The level is basically 10,350, and the gap down level which it opened today is also 10,350. So it is trying to inch itself higher, but let us wait and watch. And if this 10,350 is not taken out on the upside, then you are seeing a straight fall towards 10,300, and then a sell-off can obviously come if Bank Nifty is weak. So that is on the hourly side. So 10,350 becomes impeccable mark. When I see on the 15-minute chart, the things become way clear, because if you see on the 15-minute chart, yesterday also gap up, selling took place, came back to this gap level, okay, and then the bounce took place. Now today again it was opening gap down because S&P was down yesterday, or it is trading low. But what I see today over here, 10,350 continuously is being kept as resistance. So last four candles of 15 minutes, 1, 2, 3, 4, continuous selling is coming in around this 10,350 mark. So it is very much clear if 10,350 is not taken out, we can basically see further selling easily coming in for Nifty. Let's see in the case for Bank Nifty. So till yesterday, Bank Nifty also was very weak. On the weekly side, it is pretty much clear that a continuous downfall is seen in Bank Nifty as well. The agenda is whether 24,800 is basically being taken as support or not. That is more important to understand. So weekly seems to be weak and trading at today's low of the week, entire week's low. So that is not a good sign. If I go inside a day to understand, the same thing has happened for Bank Nifty as well. So continuous selling has taken place. What we need to understand from today's opening, again today's opening was below almost prior day's low, and now it is trying to inch higher, right? So the same case as far as Nifty is concerned. On the hourly side, things will become very clear. As we see over here, these were the base which are formed. So today it opened gap down exactly at the same base, but has inched little higher. So that is where it is providing some kind of support to Nifty. But if we try to understand, today's gap down opening below previous lows is not a good sign, right? It is trying to fill this gap, but then further selling can come in unless and until it breaches 24,925. That is yesterday's close. Otherwise, selling will persist and Bank Nifty remains completely weak for this entire series itself. So that is what you can look out for Bank Nifty. Currently, it is turning out to be strong after the gap down opening. So it is trying to inch higher, but the only upside can be marked or understood if it breaches yesterday's close. Otherwise, it is just filling of gap and then it can again come down to see further selling coming in. So that is Bank Nifty. At least from morning, it is showing some kind of resilience and a quick bounce back on the upside. Now let's take today's gainers and losers. The top gainer losers are again the IT pack. So what we see again over here from yesterday, TCS, Infosys, HCL, Tech Mahindra, all these are performing. This basically shows on the back of USD INR, right? So there is one uptick which has come over here. India Bull was basically is showing some strength. Then you have IndusInd Bank. So if you see IndusInd Bank, Sun Pharma, they were sellers yesterday, and now today they have gained some pullback or buying opportunities seen in these stocks, because of the large sell-off which has happened. Now, when I go out in the losing side, you are still seeing Hindalco on the losing side. So now Hindalco we are seeing around 2-3 times. It is been falling rapidly. Then you also have ONGC and Asian Paints going down along with Infratel. So all these stocks have been going down, have been the loser. So that is the case on the losing side. So let's go and pick out some of these gainers, specifically Tech Mahindra, India Bull, India and IndusInd Bank. So on the banking side, we can remove IndusInd Bank. So IndusInd Bank, we had basically taken yesterday as well. The important point to consider on IndusInd Bank was it has basically come to its support zone and it has also filled the gap. So if you see over here, 1590 was the support zone, and today we are seeing a quick bounce up or the up rally which is seen in IndusInd Bank, right? So quick uptick because of the after a huge fall, continuous falling has taken place in IndusInd Bank, and clearly after the expiry, some respite will come if open interest goes down. So if I look on the 15-minute chart, just to understand what's happening in the morning itself. So what happened in the morning, yesterday's close was around 1600. It opens gap down, tries to go down, and then all of a sudden it takes a U-turn. it closes above or it goes above yesterday's close, and then it pulls itself higher, right? So yesterday's close was around this 15.95 or so, and then today, right from morning, you are seeing around 13 rupees upside from yesterday's close. And now what we see on the 5-minute chart, this is acting like a resistance 1610 and 1612 on the 55-minute chart. So we can basically go down on hourly chart to understand where is the higher resistance, because on the hourly front, the resistance become very much clear rather than 15 minutes. Now what I'm seeing over here, it is a quick pullback which has taken place. So these candles which are there, they have multiple level of resistances. So 1612 becomes a good source of resistance, but it can inch itself higher towards 1620 or so, right? So what we need to understand over here, a continuous downside had taken place in IndusInd Bank. Today it has opening down and then trying to fill the gap, go above yesterday's close, and trying to inch on the higher side. So that's for the IndusInd Bank, looking strong. Now there is one more bank, Kotak Bank, where we were bullish upon. Kotak Bank has not been seen going down much in this entire downfall. So what I see even on the Kotak Bank on the daily side, it is swiftly going or trading in a small range of 1060 to 1040. Even what I see, a quick pullback has happened in Kotak Bank. Obviously not like IndusInd, but the correction is not been that severe. So if you see from the top, the correction has not been that severe as compared to IndusInd Bank. So that is Kotak Bank also showing some strength. The next is HDFC Bank, where it has basically moved to a very important juncture as we were speaking yesterday. Something which is very, very important in HDFC Bank. It opened gap down and it went gap up. So this was an abandoned baby structure which was formed. But what we should understand, gap down and gap up basically shows this is a good point of uh, importance that we should understand, because if I go back a little, this has acted like a huge support for HDFC Bank, right? Roughly around 1850 or so was a huge support for HDFC Bank. And what I see over here, a quick selling takes place, it comes back down. Today it opens gap down. So HDFC Bank opening gap down, and that too below a major level of 1850 is not a good sign, because in this itself, if you see, if HDFC Bank keeps going down, it can itself pull Bank Nifty down. And if you see on the downside, there is a clear visibility of 1820 or 1815 coming on the downside, or downfall is easily possible around 2% or so. So which is not a good sign. And we can basically see expiry of Bank Nifty going further down if HDFC Bank does not support. Now HDFC Bank is weak, Kotak is strong, IndusInd is strong. So we need to understand who else are strong, who is providing support to Bank Nifty. So taking out Axis Bank. So when I remove Axis Bank, pretty much that is also weak and in its support zone. So Axis Bank is also almost in the support zone, and it is also weak as such. But seeing Axis Bank, or then we are trying to see even ICICI Bank. So the structure does not remain strong for these banking stocks. What I'm seeing even on ICICI Bank, it is almost at the brick of very important juncture 315. And so HDFC and ICICI being on the important juncture of 315 or so, it is clearly possible that you can see further downside even on ICICI Bank. Right, so one thing is pretty much clear. The banks are remaining on the very important level, which one should understand, and you can see a further downside on the banks. Taking now Asian Paint. Please try to avoid scribbling on the screen, because this does not help me out and others as well to see the screen. So do not annotate anything on the screen so that we cannot, so it does not disturb others as well. What I see on the Asian Paint, it is now on the important juncture as we had spoken prior as well. So what we see on Asian Paint, it is now on a good support level of 1100 or so, and this is where a good upside had happened in Asian Paint also. So now it is back to its base. If you understand, oil has been going on the higher side. What I see on the Asian Paint on the broader scale, this is a major support for Asian Paint, and you can see a small crack coming in if Nifty goes down, but the rally will be faster. So moment it enters in this range of 1080, 1060 or something, a quick rally can come in. As you saw last time, from this point it had zoomed one way. So this was the point where correction took place. Again, it retraced 60% of its fall which had happened. So Asian Paint can be one of the good stories to bet on, but right now it is trying to fiddle with the important support. So let us wait and see whether the support has been maintained, and then you can have further downside, which is quite possible if oil tends to go a little higher. So Asian Paint being one of the seller today, one thing is pretty much clear: the fall is almost around the support level, right? So the important thing to watch out for Asian Paint is 1100 or so. Taking the auto stocks, so specifically Maruti. Uh, Maruti has been under correction, but something which is very important to understand on Maruti, the correction has taken place. So this was a good support level, 8655. Bounce back took place. Now it is back to its support level. So kind of forming a double bottom formation. But what is more important to understand, whether it can sustain these levels or no. So if it cannot sustain these levels, it is pretty much clear that it is tough for Maruti to just go high or reach towards 10,000 or so. There can be one more follow-up selling. So if Nifty goes down, Maruti also can go down. But if it goes down on the 8,075 or so, it is a quick uptick will come in after that fall. So we should always look at these stocks which are very, very important, and they have a good story lined up, and this is just a minor correction coming in. Now the correction which has come is because of the quick rise which has happened in Maruti, right? And then it went sideways, and then now what we see over here, it is trying to inch down. So now it is entering into the phase where the rally had started. So the max fall, if it happens to be, is 8050 or 8100, right, from where the rally had started. But obviously it should not reach over there since the stock is very strong and people will want to buy. But we cannot rule out that a fall can come to these levels, but at least half of this 8400 is on the card. All I'm trying to say, if these kind of falls come in, the rally will be fast and swift on the upside, right? So keep an eye on Asian Paint and Maruti. Both are equally important, and HDFC Bank. So these three stocks are good stocks to look out for when we are looking for the heavyweights. Now Tech Mahindra, specifically Tech Mahindra from IT, I am trying to push it because if you see on the top side, the correction had come. So 3 days continuous falling took place. One day it stopped over there, and the next day it opened gap down and zoomed. Okay, so it went down and then it basically went up, and now you're seeing again today it is opening gap down, and it is again trying to inch higher towards 610 or 11 or so. So the quick move that we have seen is from 615 it went to 570, and from 570 it is back to 615 or so. So idea is pretty much clear: when these stocks go down and when they go up is because of the US dollar weakening and USD INR going up. So that is where you will basically see a quick bounce in these kind of stocks. So you should always keep an eye on these stocks when they reverse. When I see even on the Wipro, it has been going in the range and it has corrected a lot. So for a long amount of time, Wipro is going sideways. But the most important point for Wipro is 298. Once 298 is out, then you can see quick uptick coming in for Wipro as well. So from all the upper guys, the top guys, Wipro basically seems to be the weakest link. But what I see on Wipro, a continuous fall has taken place. It is now moving sideways, and if it crosses 298, there is certainly a good uptick for Wipro as well. From the cement pack, ACC and Ultratech, Ambuja Cements were tad bit lower, not that great. But what I see on ACC, it is open gap down. So important point for ACC from the top is this is the base, right? So 1590 or 1600 is the base. It can come down, it can test once again over here, and then you can see a quick buying coming in. So ACC and even Ultratech both have corrected. So this basically gives us a good buffer in terms of stocks which are corrected. Now, when you see Ultratech as well from the top, 4,500, then 4,300, 350, and now you have straight away down to 4,000. So almost 10% correction has been set in for Ultratech, and this is a common base around this 4050, 4,000. We basically look into Ultratech whenever they correct. It can basically result into a double bottom formation, and you can obviously keep an eye on these stocks. Then you have important stock, which is Z, the only entertainment industry which is in Nifty50. Now, what we saw on Z from the top 620 after the result, there has been a continuous downside. So almost this was the low around this 560 or so, and it came back and again it corrected and went towards 550. So two times it is trying to go down. Let us see whether it can sustain and basically show some upside on Z. But ideally, this is a stock which has had good run. So if I see this is the complete base around this 550 or so, where multiple times supports have been taken. Right, so this is 550 where multiple times support has been taken over here, and now you have once and twice coming back to the same zone, and then you also have 530 on the downside. So max is if you get a chance of 530 coming in, which is very very bleak, but it will be an amazing opportunity for a complete reversal of Z, right? And then you can have a target of straight away 588 and 620 on the upside. But then we need to wait and watch in these scripts, because now FOMC minutes are out. Meeting will be on 18th of March, 17th, 18th of March, and then you need to basically focus prior to meeting. You can find a one down tick which can come in. So it's better to trade carefully going into the new expiry rather than just jumping in and trading in. It's better we wait for a couple of weeks, FOMC thing gets cleared out, and prior to that you can find one correction coming in. Now seeing Nifty, normally what I see or understand after the expiry, now it should go down every day. It is now going almost sideways. The candles have become smaller, so from one to big candles, now these candles are small, which basically shows there is no big sign of downside as such. So you can find a quick bounce back coming in Nifty of 200 300 points, and maybe towards FOMC it can go back and test these levels of 10,000 also. So before 15th of March, you can see a good correction. Good correction in the sense from 10,400, 10,000 is quite possible. And after that, the post correction, FOMC will be done, and then you might find Nifty going back to 10,600. Right. So it can be a roller coaster ride, up and down, and then again up towards this 10,600, 700 mark. So it's going to be most volatile month. So it's better we wait for some time to settle in. A quick bounce back is obviously possible, but do not try to get stuck in that bounce back, because prior to FOMC meeting there will be one downfall which can also bring Nifty to 10,000 mark. Right. So that is always open case for the understanding. And obviously this does not show there will be a fall today itself, because after 2-3 multiple red candles, now the bodies are very very small. So chances of 10,275 today is possible, but going all the way to 10,000 is not possible for today's expiry. Chances are very very bleak. It's not possible at all. So that is what I say. A small bounce back will come in, but before 14th of March or 15th of March, you can see 10,000 coming your way. So this bounce should not be taken as a sign of reversal and bought into. You should be clear about FOMC meet, which might come in the middle of March, next expiry, right? So keep that in mind. Try not to get in too fast. Let that meeting get done. If you have correction post meeting, is the best time to go out and fetch for good quality stocks, right? So you can look for your trading patterns in those stocks. And in the last 2 weeks of March, we can look for our option strategy. If the fall sets in prior to FOMC, then we can look for our option strategy for towards the expiry, right? So that's it for today. We'll join in again tomorrow. Thank you for joining in, and we'll see you tomorrow.